A woman walks into her bank in Germany and deposits 9,000 euros in cash. Nothing illegal about that. The next week, she does it again. Just under 9,000. Again the week after. Every single deposit is legal. She never goes over a limit. She never breaks a rule. And somewhere inside that bank, a computer quietly raises its hand and flags her. By the end of this, you will know exactly what that machine is, why the bank is legally forbidden from ever telling her it happened, and why, after all of it, barely 1% of Europe's criminal money is ever taken back. So, first principles. A criminal's real problem is not getting money, it is explaining it. Cash from crime cannot buy a house or sit in a bank account without a story behind it. Money laundering is the work of inventing that story, and anti-money laundering, AML, is the machinery built to catch it. Here is the part that surprises people. The state does not do this, it conscripted the banks to do it. EU law calls them obliged entities, and it hands them a list of duties whether they want them or not. Your bank is not being nosy, it is being deputized. Laundering runs in 3 steps. Placement, getting the dirty cash into the financial system in the first place. Layering, moving it through enough accounts and borders that nobody can trace where it started. And integration, where it comes back out looking like a salary, a loan, a sole department. Now notice something. Layering is hard to see. Integration is nearly invisible, but placement is physical. Somebody has to walk through a door carrying money. That door is the bank, which is why the bank's front counter is the whole battleground, and why our depositor is standing at it with 9,000 euros in her hand. So the bank's first job is to know who she is. Everyone in the industry calls this KYC, know your customer. Open the actual law and that phrase is not in it. Europe calls it customer due diligence. Identify her, verify she is who she claims, work out who really controls the money, understand why the account exists, and then keep watching for as long as she banks there. How hard the bank looks depends on how risky she seems, which is the founding principle of the whole system. Low risk, less checking. High risk, more. She looked low risk. She owns a small cash business. Of course she deposits cash. Then there is the machine. European law says a bank must monitor its customers' transactions continuously, and in Germany it goes further. The Banking Act says a bank has to actually run IT systems capable of spotting the unusual. But read those rules carefully and something is missing. The law says the bank must watch. It never says how. No threshold is written down. No product is named. So the rules that decide who gets flagged, deposits above this much, this many times, in this many days, those are not the law. The bank invented them. It is a business decision wearing a legal costume. And her deposits are always just under a round number. Never over, not once. That pattern has a name, structuring, and almost everyone gets it wrong. In America, a bank must report every cash transaction over $10,000 automatically, suspicion or not, so there the number to hide under is public. Europe never asked for that. The European duty is to report suspicion, not to report amounts. In Germany, nothing is automatic at all. What Germany has is a paperwork line. Deposit 10,000 in cash and your bank has to ask where it came from. So she stays under it, week after week. And that is the mistake. The law already saw her coming. The threshold does not count one deposit. It counts several operations which appear to be linked. Staying under the line over and over does not put her below the line. It puts her on the radar. Now the machine flags her. And here is the single most misunderstood thing in this entire field. That flag is not an accusation. BaFin and the German FIU say it in writing. A system-generated alert is, as a rule, merely an anomaly, a reason for the bank to go and look, nothing more. The alert is not the suspicion. The alert is the homework, which means the machine cannot report anybody. It is not allowed to. Every single flag has to land on a human being who decides whether it means anything. That is not an efficiency problem. It is the law. So an analyst picks up her file, deposits, business, story, history, and decides there is something here. The bank now files what Europe calls a suspicious transaction report. Americans and the British say SAR. In the EU, it is an STR, and it does not go to the police. In Germany, it goes to the Financial Intelligence Unit, which sits inside the customs authority, and the bar the bank has to clear is far lower than people assume. Germany's constitutional court settled it in 2020. A suspicious activity report is not a criminal complaint. The bank does not need a prosecutor's evidence. It needs objectively recognizable indicators and an inability to rule a crime out. Proving it is somebody else's job entirely. Here is what a smart, busy person assumes happens next. The bank freezes her account and calls the police. It does not. Filing that report freezes nothing. What the law actually does is much narrower. The one transaction the bank believes is dirty, that one it must hold back, and then it waits. In Germany, 3 working days. If the financial intelligence unit says nothing, the money moves. Her account stays open, she stays a customer. There is no rule in European law that says a bank must dump you because it filed a report, and supervisors have openly warned banks against throwing customers overboard just to make a risk go away. The only time the bank truly must walk away is when it cannot complete its checks at all, when it genuinely cannot establish who it is dealing with. Which brings us to the strangest rule in the whole system. The bank cannot tell her. Not that a report was filed, not that one is coming, not even that she is being looked at. So she walks in the following week, deposits again, and the teller smiles at her. That smile is the law. It is called the prohibition on tipping off, and it is the reason this entire machine runs in total silence. Break it in Germany and you are not going to prison. You are paying a fine of up to 150,000 euros. But for her, the effect is exactly the same. She will never be told. She may never find out at all. So, does the machine work? Be honest about this. Most alerts are wrong. The industry's own estimate is that 90 to 95% of them turn out to be nothing, and I have to be careful there, because that is an estimate, not an official statistic. But you do not need it. The official numbers are worse. Europol looked at what happens after the reports are filed. Only around 10% are ever investigated further, and of all the criminal money moving through Europe, the share ultimately confiscated is, in Europol's own word, barely 1%. Meanwhile, Germany's FIU took in over 260,000 reports in a single year, an enormous amount of work for a very thin catch. And when it fails enormously. Denmark's biggest bank had a small branch in Estonia. Roughly 200 billion euros in suspicious payments moved through it over 8 years. Suspicious, not laundered, because to this day, nobody has established how much of it was criminal. It ended in a US courtroom in 2022, with the bank forfeiting about $2 billion. And here is the detail that tells you what this system actually punishes. It did not plead guilty to money laundering. It pleaded guilty to lying to American banks about its money laundering controls. The controls are the product. Get the controls wrong, and that alone is the crime. Which is where AI finally walks in, and not where you would expect. The dream is not a smarter alarm. It is killing the 90% of alerts that waste every analyst's week, so humans look at the cases that matter. Supervisors are not against this. BaFin's position is simply that the more complex the algorithm, the harder it is to follow, and traceability is exactly what they will ask you for. You can use the black box, you just have to be able to open it. And one myth worth killing. People assume an AML system is a high-risk AI system under the EU AI Act. Go and read the high-risk list. Credit scoring is on it. Anti-money laundering monitoring is not, and never was. But nothing there changes the rule from 4 minutes ago. The machine can flag, only a human can report. So what happened to our depositor? A machine noticed her. A human read her file. A report went quietly to the customs authority, and she was never told any of it. Nobody in that bank ever decided she was a criminal. That was never their job. Their job was to notice and to be unable to rule it out. That is the whole thing. Anti-money laundering is not the bank catching criminals. It is the bank being legally required to notice, to write it down, and to stay silent about it. Steal one question from this. Not, is this person guilty? Just, can I rule it out? If you want the detail behind episodes like this, the free Reg AI Brief newsletter is linked below.